Hello everyone. Not much thing to look at today. I don't have any names that I'm interested in. So probably gonna just like look at the market and maybe like to see whether some of my shorts are getting stopped out or not. So AOI is at an interesting level. The anchor VWAP from the swing low, the start of the stage 2 we got the past few months, and also the 150 EMA. But weekly is under the declining 9, and the 21 is also curling down, and it's barely under the 21 too. Probably we may get a bounce into the declining 9 on the weekly, which is near the daily 50 EMA. So want to see how AOI is gonna like break out, which way is going to break out. And right now is I think maybe we maybe need some chop and need some consolidation or it bounce into the 21 or the 50. I will be quite surprised if it like starting to lose the 150 directly from here without the bounce. That would be really a really weak action. We also got the South Korean SK Hynix and Samsung is gapping up into the declining 9. I think it could be a short, but the ADRs are gonna have a higher gap risk, so I think maybe not gonna trade them. WDC today is also actually a pretty decent short. Yesterday the fade from the 21 EMA. Today we got a flat open and trying to push higher into the declining 9. And today we got a strong open. We got a gap up, and let's see. Russell today looks pretty strong too. And software remains strong, and interesting to see how things would develop in the coming weeks. If we look back in the 1999, the AI bubble, after this lockout rally, we got a few months of a very weak uptrend. We're still definitely making higher highs and higher lows, but we're like up 5% or up 10%, and then like down 9%, and then up 15% and down 12%. So it's a really weak uptrend after this lockout rally. I can't find, I don't know like what's really going on during this period. Yeah, but I believe it should be a difficult period, and this is almost like 9 months, I think. I mean more than 9 months, 10. But still, I think QCOM starts its stage 2. I think right after the market the lockout rally ends. So it's around January. It is March, late March. So January is right here, and then late March is something like here. Yeah, so maybe the next like the 10x stock, the stock that makes 1,000% move is still under the radar. Or maybe they are the cybersecurity stocks. Maybe we'll see. Do you remember your entry on AOI out of April correction? I don't think I I I get AOI on this field. I yeah I don't think I got AOI on the way up on the first leg up. Maybe I bought here and then got stopped out, and maybe I bought on this day too, or this day. Yeah, AOI is not an easy trade. In the last stage 2 uptrend, it's a little bit choppy and moving not really that orderly. So definitely not the best stock to trade. During the last lockout rally, there are lots of better stocks to trade, but still it is one of the biggest movers in that period. Lithium monthly looks very good. Yes, I noticed too. I noticed that. But I'm not good. I'm not good at like holding both longs and shorts at the same time. I think, and maybe I need to study that a little bit more, and I think it's easier and simpler to like focus on one side only, and it won't like fuck your mind, because sometimes managing both positions on both sides is kind of difficult to me. But definitely it doesn't mean you shouldn't do it or it's wrong. But I just think it's easier to manage for me. If you can like only would like to focus on the long side, then I think it looks pretty good, and you can also like do both longs and shorts at the same time. As long as it suits you, you're comfortable with that. Like, can't stress this enough. Like I mean, there are like if not hundreds but thousands of like ways to trade or styles to trade. You just need to find the one that suits you best. So there aren't many like really model answer or correct answer on how to trade, but there are only a few that suits your personality, your risk appetite, your style, your character, etc. Hopefully, Rivian can go sideways a little bit more, and like if the market really starts pulling back from here, showing some weakness, and then Rivian can show some relative strength, and let's say like pull back to the 9 EMA or even the 21. I think it looks perfectly fine, and it makes the right side of the base much better to manage the risk, and looks ready to go. And maybe like let the 150 EMA on the weekly to flatten a little bit more. And there's definitely some sellers up there because we got some gap down, huge red candles near the 18 or 19-ish levels, and also we got the previous swing high that cannot get through. So yeah, Rivian is one of the stocks that I would like to keep monitor, keep track during the maybe not the correction, but like the consolidation. If the market turns weak, I think not only good for my shorts, but also good for spotting the next leader, spotting the next opportunities. And then we got a bearish engulfing candle. We take out yesterday's breakout candle low. Not a good thing. Actually, it's kind of bad. Especially on the weekly. Like it looks like maybe a high tide flag or like a bull flag or something like that. But given that the prior uptrend is very stretched into the upside with huge volume coming in, and we are now testing the previous swing high, and there are lots of the times a failed breakout from the previous high, like building the first lower highs on the right, when it attempts to to set up and for another breakout, but when it failed, it most likely, I think 99% of the time, it just marks the end of the uptrend, and it's not a good sign to see. Do you trade smaller on the short side or just the same as the long side? I treat them the same. Like all of the position sizing is just calculated by the stop, how wide is my stop, and also how much risk I'm willing to risk. When you say you need to study more, can you explain a little bit, like how many hours you spend, or what are you specifically looking for? I mean, it depends on I don't know. It depends on what topics I would like to study, and it also depends on how focused I am during the study, and also some kind of luck, because sometimes you come up to some ideas, or you're starting to have the aha moments, or like a blank in your mind, and oh, I think that works. And I mean, some like the idea or the creativity really differs every time, or like differs between different periods, or and there won't be a time, a minimum requirement for how many hours you studied, and you must reach to a conclusion, or reach a new idea. You come up with a new idea. It's not a lecture. It's not a course. Sometimes it just you may only take like 5 hours to really digest a thing, but sometimes you takes maybe weeks and months to figure out some concepts, or etc. And I won't really like set a timer for my study. Oh, how many hours did I study today for this and for that? That just makes trading boring, and like not fun at all. I think we really need to enjoy the process. You don't like focus less on the results. I would say, just like no matter, can you really take something out? Can you really learn something new or not? Actually, it doesn't matter. I think the importance is the process. Like, how do you approach the problem? How do you like trying to figure this thing out? Although you may fail this time, but like the experience on how you approach that, and how you trying to how tackle the problem, how drill on such a certain topic, it actually matters more. Speaking with trying to hold like longs and shorts at the same time, then probably I don't know, maybe go back and look at some periods where there are some stocks keeps going lower. I think the one that I can find I can recall on my mind is it's late 2021. Like I think some stocks are really weak, like Square back then is now called Block, but like back then it's Square, and it starts the stage 4 downtrend on November, but I think at the same time, the AMD at the same time is doing pretty well. Like AMD on November is like a really strong stage 2, still halfway from the top. So sometimes maybe I don't know, maybe I'm just going to open both charts at the same time and see if what if I long AMD on this day, 13th of October 2021, and then I maybe I shorted like Square on this day or this day, a few days later, a few weeks later maybe, and yeah. So maybe just from this comparison, just from this example, if I can, I think I would probably sell AMD on this on either on this day or this day on the high volume and the extension to the upside. Just a few days after I take the Square shot. Even if I don't, I keep trail the rest with the 9 EMA. I probably won't like. I think Square still looks so very weak on this week, although it got a bounce into the decline in 21, but like the 150 is starting to turn lower, and all the EMAs are turning down. I probably would not get out. I think this could be also a good spot to short if I miss the previous short opportunities, the short entries. So yeah, not much like takeaways from here, but like doing this type of study, then helps you to like at least you get a sense of either like holding both longs and short at the same time could definitely work, and maybe it just helps your conviction or I don't know, anything that helps you to trade better. And one thing that I noticed from AMD on this base is the second attempt that it tries to like break out, tries to regain the grounds from the previous swing high to the all-time highs back then, but gradually it pulls back and trying to set up, but we got a huge ugly reversal candle and losing the 50-day, and then we got a bounce into the declining 21 and also the 50, and like all the EMAs are just clustering together. Like it they are so similar. I think the best shorting opportunities is right there, and this type of examples can like really train your eyes to help you understand the market dynamics a little bit more. And the AMD is also performing pretty decent on, but not like in percentage, it's not that much. But yeah, this uptrend is pretty strong, and but I think it also coincides with the market weakness on the late 2021, because the 2022 is the bear market. So I mean that's low. I think this is also something similar, like also after a huge rally, huge uptrend, and then looks like it's like setting up like a VCP, small little VCP or a high tide flag, but it failed. Loses the 9 EMA and then goes lower. So yeah, just trying to observe. Like I think no, I didn't get taught. I didn't. Someone never told me about that. Like a failed breakout after a huge rally. I just kind of observe what the market does and trying to be a little bit more curious, and I think the market just leaves some little puzzles in the charts and letting you to discover. And also doing your own study is the best way to improve rather than like relying on others sharing or others tools, other platforms. You can definitely take something out or learn something new from others sharing, but you have to do your own research, do your own study to really make it yours instead of like purely taking from others. You have to really verify it by yourself. AEHR got a gap up today after the earnings, and it's actually at the previous unfilled gap. I think unfilled gap is also one of the things that I observed. Kind of, definitely not the early stage of my trading. Uh, I just gradually notice like the price tend to respect the unfilled gap quite efficiently, and we have AEHR is one of the example right here, gapping up into the prior gap area and also the near the previous swing high, and we're now facing some resistance, and we'll see. I think a lot of the semi names now looks like this area of QQQ back in 2020. Also pretty extended rally, and then we got a sharp decline from the extension and rallying back into the decline in 1921. We could have, I think, maybe we will find the semi sector as a whole can. I think we need a longer base. We need a longer consolidation for setting up another uptrend. I just shorted a bit of SK Hynix. I would like to. I think I can expand on this a bit. So generally, when I try to take a new trade, most of the time I would like to align with the like to look at the daily and the weekly first. Maybe actually not. I think the first thing that I look at is the sector or the theme itself. Are they doing well or not? I don't want to short the stock where its peers or its sector is doing very well, but it's a laggard in a strong sector. So I don't want to short the laggard in a strong sector. Would like to focus on the stock in the weak sector. So the more stocks look weak within that sector, the better the sector I would like to short, and vice versa. Like if I'm trying to long, I would like lots of the stocks. Many of the stocks are looking great, are in an uptrend or showing relative strength to the market. Like doing some bullish candlestick pattern, like maybe undercut and reclaim, or like building higher lows and showing some volatility contraction, maybe some inside days, etc. So in this case, I think semi sector as a whole it's just kind of weak to me compared to the market, and I don't really like the volatility and the volume expansion up there. So yeah, that's the big picture behind. Is the first thing is the sector and the theme, and then going to the individual stock. So SK Hynix is definitely one of the huge leaders that is extended into the upside and now is breaking down below the 50 EMA, and this is the first bounce into the declining 50 and also bouncing into the declining 9. This is the Korean stock, South Korean stock, the underlying stock chart, and I really love shorting at the first bounce or the first pullback. So, and also it aligns with the previous swing lows from the bear flag here, and also the declining weekly 9 EMA. So this is the daily, and also the weekly too. Although weekly is not that much, but like weekly volume expansion, definitely some sign of distribution that I don't really like. And intraday, so I think you guys know I love shorting on the bounce. So luckily I didn't short at the opening range lows, and we got a quick flush and into the previous high on this APO day. It's not IPO, but like maybe the ADR, like ADR launch date. So like maybe the previous swing, maybe I consider this as the previous swing high then, and find support, rallying into the unfilled gap and also the declining 9 EMA. If you like before the close, before it really turned lower, like the 9 EMA is around 187. If you look, you can go back to the recordings and to see how the 9 EMA looks. And yeah, and also near the unfilled gap from this huge green candle, so we got a unfilled gap below 188.50 ish area. So I'm looking at this these levels. I think it's definitely okay to overshoot a bit, maybe into the 189 or 190 level. It did find some resistance like at the 188, and I think when I saw this 5-minute candle gradually like losing the momentum, then yeah, I zoom in into the 1-minute chart and use the anchor view on the 1-minute chart, and this is the technique that I learned from Christian when he's doing like the parabolic shots. He always linked it to the either the anchor VWAP from the open or the high of day, and yeah, he used this on parabolic shots. But I think I just noticed that it works pretty well on other shots as well, other entries as well. So I just utilize this entry tactics into this trade, and yeah, and we got a 1-minute bounce into the anchor. I think this is one of the best trades I've talked actually recently, and hopefully it works out. But if it doesn't, I think this entry is one of the best this year, definitely. We'll see how it plays out, and yeah, the stop is pretty tight, and I think the entry is pretty concise and logical at a point. Yeah, definitely you can wait for the 5-minute breakdown, but the stop will be a little bit wide. Maybe I'll set it to this day to this bar high, but it also like a 2% stop. So that's why I always look for other types of entry strategies to really tighten my stop and find the best risk reward entry potentially. Also, the weakness of the whole semi sector and the Western Digital is the one that I didn't take on the opening range low breakout, and it just go. I mean, like it's like gravity. It's like bungee jump, and it's showing huge weakness. So it also helps I think it helps the short on SK Hynix too. So yeah, I think the pattern itself is not the most important thing for taking a trade to me. It's all about the theme as a whole, the sector as a whole, and then gradually zooming into the individual stocks, the weekly, the daily, and then the intraday. So sometimes I may also like comparing it with maybe the index, maybe the sector ETF to really nail the intraday entry. But yeah, it really depends actually. I think some kind of the precise entry really depends. Because I don't remember. I don't think there's any pattern like telling you to short right here. I I just think I just couldn't find any. But I would consider this entry, this short is a really good entry and a really good one, a really good trade. No matter where it's going, how it's going to end up. I mean, actually, if you don't look at today's candle, I think this pattern as a whole is actually a bullish pattern. What does it? I don't know. What's the name of this one? Like a doji and then a huge green candle like this. What's the name of this pattern? Morning Star, I think something like that. Morning Star, I think. Like a red candle and then with a doji and then a huge green candle on the right hand side. It's actually a bullish pattern. But I think the pattern really doesn't matter. It just like it's like gimmick. Rivian is really showing strength today. Really nice. And the software names is also pretty strong. I think probably this anchor would be a huge support level for the semi sector. Probably gonna like book the profits around here. Maybe most of my profits or maybe all of it. I don't know. But the first thing is the follow through. It's too early to. I don't want to celebrate too early. But definitely at this level, and also overlap with this candle low as well. I think that is what I would like. That is the one that I'm talking about just now, like the failed breakouts, the failed VCP, or and makes the forms the lower high, and it's really not a good sign for the stock and maybe even the sector as a whole. And I think that's why I stay away from Dell after I sell it on Thursday Thursday I think. We're getting a little bit accelerated into the downside on the semi names. I think I'm gonna follow the plan and wait for the semi the SOXX to drop to around the 555 level to cover some of the shorts. Not sure how many that I would like to cover. I think it depends. It really depends on like how weak the market really becomes. Like, is it only this semi sector free falling, or it also spread to other sector, or the general market as a whole? I think I'll probably cover core with at around maybe 74, 73, 72 level. Other names I don't know. When did you open your shorts on MU? Last Thursday on the bounce into the 9 and 21. I think it would be the 5-minute breakdown, probably. Maybe, I think the 5-minute breakdown. This candle here. I think this is also a pretty decent entry, in my opinion. The first 15-minute fake out and then the breakdown on the daily declining 9 and 21. Is it at the anchor free web as well? Maybe not, but on this day, the semi sector ETF is also at the similar level, the 9 and 21, and it is kind of slightly below the anchor free web from the all-time high, and then the Q is also at the 9 and 21 and also the anchor free web from the all-time high as well. the Q is close much stronger than the semi on that day. Not sure whether like how fast this flush is gonna go. If it really like flushing down into the angel free web within today or tomorrow, maybe. Uh, I think I would. I think the faster it goes, the more that I would like to cover. If it's like slowly drifting down, then I think I would like trying to trail a little bit more. But that's just my current thoughts, and I think it is subjects to change anytime. But for sure, so I definitely prefer like covering into weakness rather than trailing all the way down. Given that actually the most of the semi names on the weekly is still above maybe the 21 EMA or the even the 9 EMA. Do you use SOCX instead of SMH for a specific reason? To me, it's easier to track because the leverage ETF is based on SOCX, so I'm not sure about the holdings. Yeah, I think SMH is a little bit too uh focused, or like it's overweight on Nvidia. Yeah, and StockX is a little bit more diverse. I think it helps to really better show the big picture on the whole semi sector. But the main reason is actually the leverage ETF actually. But I mean, if you use SMHs, shouldn't be. I think it really looks similar, but also, but I think it actually aligns better with the anchor free web on Thursday. Yeah, multiple touches, fine rejection, and then yeah, it actually aligns a little bit better. Tesla looks really really bad on this candle. I actually tried Tesla on Tuesday last week, but it failed. It stopped me out, and so it also, I mean, like after it got stopped out, and I decided to like focus on the short side instead. I think I tried buying on the 15, I think on this candle, or maybe I think this candle on the 50 EMA reversal on the 16-minute chart. But I guess I got stopped out. So yeah, sometimes losing trades is really guides you and gives you some hints on the market direction, and I really like using the trade feedback sets. I think they are the best indicator of the market. When do you enter call with? Looks like there's an entry on 25th of June. Yes, and also 9th of July. Yes. I think like the 10th of July is also a pretty decent one. Monday is let's see. Yeah, Monday is also a pretty decent one. So yeah, but I mean I think the best one is definitely the back in the 25th of June. This is like the EMA start. I just really close and crossing lower. The faster 9 and 21 starting to cross the 50. Thoughts on rock collapse bouncing off the 200 day. Yeah, maybe it's like serving the 50 EMA on the weekly to me, but I don't know. I think if you manage to like, I think the market needs to cooperate a little bit, but because Rocket Lab is a little bit like showing relative weakness. Most of the time, I don't like buying a stock that's the laggard of the market, and I really don't like it the last push to the upside, and then we got a really quick huge volume pullback. correction from the top. Yeah, then this is not my type of entry, I think. But it doesn't mean like I don't know. Like I really I don't have crystal balls. I can't really predict the future. And but it's now really it looks really weak right now, definitely. The light is doing wonderful, doing what exactly I wanted to do. Yeah, it's also like fading off the weekly 9, off the 50 EMA daily. Huge red candle, slicing through all the EMAs and now approaching the unfilled gap below. I kind of wanted like to trail this one for a little bit longer to see how it turns out. But I mean every semi names looks weak right now. That could find support at any time. So yeah, so probably I think I'm just covering most of them, or maybe even all of them into the weakness. For selling, I really don't know. I really like go with the flow. Got earnings on next Wednesday on SK Hynix. Probably I'll cover my shorts before the earnings. Mean reversion bounce long on StockX after you cover your shorts. Like you said, a longer base or in consolidation needed. It depends. Uh, I don't know. I would like to see how fast the dip is going to get. If we only got it like a 2-day dip and into the anchor VWAP, or maybe even longer, so maybe like if we are not seeing a really huge red candle, are there any example for that? I think the best one is definitely the one huge red candle, like undercutting all the support, probably into the weekly 21. That would be the maybe the spot that I would like to take the mean reversion long. But if we only get like a few days and then orderly going down, we're not seeing really the panic sell or the speeding up to the downside, then probably I'm not gonna take it. And I think we may need a little bit longer time for the base. Yeah, so it depends. Yeah, you're welcome. Which trading system will you teach your partner or kids and why? I won't teach them trading. Like trading is one of the hardest thing in the earth, I think. And because you really need I don't know, you really need to be maybe the top 15 or even the top 5% of the crowd to make it profitable. But I think it's um it's really not competing against other traders or other participants in the market. It's like you versus you, and that really makes it hard. Sometimes because if you can't really make it, if you can't really perform well, really excel in this field, you will lose money, and I think it really makes it much more difficult. Like if you're doing other skills like maybe like playing some instruments or playing sports, like if you're not doing well, you're not gonna lose money. But in trading, if you're not doing well, you're gonna lose money, maybe even a ton of money, and that would also impacts your other parts of your daily life, or even like push you in a vicious cycle, and then resulting further loss, like a much more larger loss in your financial capital. How could you tell Dell's breakout would fail? I can't tell, but I will never know it until it happens. Like Dell could definitely. It's all about probability, and there's no certainty in the finance world in trading. Like if any person that tells you this thing is gonna go up or this thing is gonna fall is a scammer. There's there's no certainty in the market that it's just like it's not worth it. Maybe the probability is higher, but I don't think it really. I don't know. Sometimes it's really hard to explain, but I mean when I'm doing a lot of like the semi shorts, why would I bother the longs on the same in the same sector? I think that's the best answer that I can give, and I really don't know whether like Dell can have a failed breakout or not, or it could probably have a gap up today, like in another parallel universe. Yeah, consider the probability of market condition, breadth, and sector. And also one thing is the semi as a whole is already like running up so high, and the sector becomes really hot, and a lot of the names like Dell it has been going up for 250% in 3 months, and the odds of getting of making another like 100% move is definitely relatively low compared to I don't know compared to maybe after the correction, like compared to the April of 2025, like after the correction, and maybe it's a wrong comparison, but I mean there's already lots of buying powers consumed during this uptrend, during especially the last few gap ups, and we got some of the peers is slowing down, it's falling off. So what's the probability of it stay away from the crowd and then standing out from the crowd and keep pushing higher and make another 100% move? It should be quite low. Maybe it could like go up for maybe like 25 or maybe even 50%, but still the odds is kind of low to me. If the short doesn't have enough profit cushion to hold overnight, do you exit it and enter again in the next day? And if you have watched my yesterday's stream, you will find out the answer at the open. What do you think is the primary reason your returns are so superior, even compared to those of other profitable traders? It's a really difficult question to answer. But first I think the major reason is definitely luck. I think achieving a really superior return needs the market to cooperate. To cooperate your style of trading. I don't think I can achieve a really decent return with I don't know, maybe this type of like weak uptrend or like a choppy market. So first thing is definitely you need some luck, and maybe the second one is like the tight stop approach that I can really maximize my risk reward per trade. What do you think of Meta's big base? It can go up, it can go sideways, it can go down. Looking back, do you think you have closed your software names too early? Maybe. I really don't know. But if I'm still in the longs, maybe I won't get enough buying powers on the shorts, and maybe I don't have that much conviction on the short side too. So I don't really know. Maybe gonna come back after a few months, and then we'll see. Right now it's too early to say, I think. hard to tell. You think anything wrong I got in Dell on 13th of July? I don't think it's wrong. It's definitely not wrong. Um, I mean, um, it's not wrong, but could be avoided. Like, um, yeah, I think that's the best answer that I can give. I think yeah, the entry itself is pretty decent. Like, you are not buying in the random updates. You're like buying it at the pullback into the maybe 9 EMA or consider the entry free web. But it could be avoided because like the overall sector weakness and the extension of the market and the sector itself and the peers also the weak action from the peers. I mean the 14% drawdown. Should I stop trading or take lower risk? If you don't know what you do, stop trading for a while. Take a rest. Ooh, that is a pretty nasty reversal on a rule break. And this is look, this is a really good undercut and reclaim. That a handshake on the 21 EMA. This from Kathy Wood. Is it? Still, it's a really encouraging action is in such a market. A firm is doing bad. Reddit looks fine for now. Let's see how it closes. Mega names are the only strong names today. Do you think there's a bearish signal? Looks like fun of finding safe haven stocks. I don't like overcomplicating things. I don't know. And I mean, like, Max 7 is leading, and that's all. I don't want to overcomplicating what I see on the market. What represent the colored flags? This one is the leading, which is the strongest stocks, and this is the mediocre, which is the fair ones. Like looks okay, and the lagging is the worst one. The pillars are the mega caps and the some of the foreign stocks. The tier 2 watch list is the small and micro caps, and this is the main watch list for the positions and the stocks that I would like to track closely. And you can go to my Twitter or watch the Trade Line interviews for more introduction. Do you trade less and use less risk over time? Yes, this year I changed from like 0.5% risk per trade to 0.3%, and sometimes I risk even less. And to me, it actually really helped controlling my drawdown. And yeah, I think it actually works better with my style to because like my entry, my stop is tight enough to build a large sizing, or at least a solid sizing, so I don't need more to get the appropriate sizing. So actually reducing my risk. Maybe I get sometimes I would maybe the sizing would be less than 25%, but my style also allows me to get a lot of entries, so I can get maybe a few more positions to like to cover that weakness or that. Yeah, and yeah, I did risk less this year. High stop loss seems dangerous in this choppy market. How do you smell that in early stage and adjust your direction? And I think apart from all the reasons that I've mentioned in the earlier part of the stream, like maybe the declining breadth or the extension of the semi sector, and also the relative weakness of a lot of semi names, etc. Yeah, I think the main signal that I catch is from my trade feedbacks. I mean, when you're really starting to get the losing streak, maybe more than like 10 or even 15, 20, and that's not a healthy signal for the market. Because generally when the market is strong, even your buys is not perfect, even your entry is kind of bad entry, sometimes the market will still reward you. Like you're still getting some follow through and not get punished. But when the market is starting to turn weak and turn choppy, even a good entry will get stopped out. And so if you've got multiple stopped out, consecutive stopped out in a certain period of time, that is definitely the signal to tell the market is slowing down, or it becomes unfavorable to your style. And I think it's also one of the advantage of using tight stop loss, and because generally your number of trades, your trade frequency would also be higher. Like you will have a larger number of trades than using a wider stop loss. So you will get a more timely feedback. You will get more feedbacks from your trades actually. So if you can utilize it instead of getting into a death spiral, I think like getting stopped out multiple times is actually a good thing. But sometimes I know when the market is still doing, like especially in the late stage of an uptrend, you still got some winning positions going up while you are taking certain losses. Like you may be still flat or slightly up or slightly down, that you won't really feel the pain. Um you won't really feel alerted. So yeah, so it definitely takes experience and takes time to learn from that. I mean, I went through a 30% drawdown in 2024, and also December last year also like a 26% drawdown. So it takes time, and the more you get, the more you get hammered in such conditions, you gradually learn from that, as long as you learn from your mistakes and refute your trades. So I think this is a really good spot to end the stream today. Hopefully, you can learn something from the stream and stay safe from this environment. Is still pretty. I think it is still like in the middle of the range. Still no clear direction shown by the market, and no need to push in this type of environment. Don't get influenced by all the other traders or other, I don't know, other people in the social media or stuffs, because only the all the noises, and don't get FOMO or don't get to panic. So thank you guys for coming, and see you in the next one.